Hello and welcome to this video on creating a Forex trading plan. In this video, we'll be diving deep into the importance of creating a Forex trading plan and how it can help you achieve success in the Forex market. As a Forex trader, you are constantly bombarded with new information, different strategies, and a multitude of opportunities to make trades. But without a clear and comprehensive plan in place, it can be easy to become overwhelmed and make decisions that aren't in line with your overall goals. That's why having a solid trading plan is so important. It's a roadmap that outlines your trading objectives, strategies, and risk management tactics, and helps you stay focused, disciplined, and on track as you navigate the complex and dynamic world of Forex trading. So, where do you start when creating a Forex trading plan? Let's go through the key components one by one. First and foremost, it's important to define your trading goals. This includes setting both short-term and long-term goals, as well as considering your personal financial situation and your risk tolerance. It's important to set realistic goals that you can actually achieve, and to regularly review and adjust your goals as needed. Your goals should be specific, measurable, attainable, relevant, and time-bound. For example, a short-term goal might be to increase your trading account by 10% within the next 3 months, while a long-term goal might be to reach a certain level of financial independence through Forex trading in the next 5 years. Once you have defined your trading goals, it's time to determine your trading strategy. There are a variety of Forex trading strategies to choose from, including technical analysis, fundamental analysis, price action trading, and many others. It's important to choose a strategy that aligns with your trading goals and that you feel comfortable with. You may even want to consider testing a few different strategies before settling on one that works best for you. Your trading strategy should outline the methods you will use to identify potential trades, the criteria for entering and exiting trades, and any other relevant information. In addition to your trading strategy, it's also important to have a solid risk management plan in place. This includes setting stop-loss orders, managing your trade size, and diversifying your portfolio. Risk management is key to ensuring that you stay in the game for the long haul and that you're able to weather any market downturns that may occur. You should also have a plan for managing your emotions, such as taking breaks when you're feeling overwhelmed, avoiding overtrading, and sticking to your strategy even when things aren't going as planned. Another critical component of a successful Forex trading plan is continuous education. The Forex market is always changing, and it's important that you keep up with the latest developments and trends. This means that you should be constantly learning and improving your skills as a trader. This may involve reading books and articles, attending seminars and workshops, and learning from other successful traders. By continually educating yourself, you'll be able to stay ahead of the curve, and be better equipped to navigate the challenges of the Forex market. It's also important to have a system for tracking your trades and performance. This may involve keeping a trading journal, tracking your win-loss ratio, and analyzing your trades to identify areas for improvement. By tracking your trades, you'll be able to see which strategies are working for you, and which ones aren't, and make adjustments as needed. Here is an example of a Forex trading plan strategy. 1. Define your trading goals. Determine what you hope to achieve through Forex trading, such as making a certain amount of money each month or diversifying your investment portfolio. 2. Choose your trading style. Decide whether you want to be a day trader, swing trader, or position trader based on your trading goals, personality, and lifestyle. 3. Identify your risk tolerance. Assess your tolerance for risk and how much money you're willing to lose in a single trade. 4. Develop a trading strategy. Choose a specific trading strategy that aligns with your trading style and risk tolerance, such as trend following, scalping, or price action trading. 5. Study the Forex market. Keep up to date on the latest news and developments in the Forex market, including economic data releases and central bank announcements. 6. Test your trading strategy. Use a demo account or paper trading to test your trading strategy before putting real money on the line. 7. Choose a Forex broker. Choose a Forex broker that aligns with your trading goals and offers the trading tools and platforms you need to succeed. 8. Create a risk management plan. Develop a plan for managing risk, such as setting stop-loss and take-profit orders and using position sizing strategies. 9. Keep a trading journal. Keep track of your trades, including entry and exit points, reason for the trade, and the outcome. This will help you improve your trading skills over time. 10. Review and adjust your trading plan. Regularly review your trading plan and make adjustments as needed based on your performance and the changing market conditions. Remember, a Forex trading plan is not a set-and-forget document. It should be a living document that you regularly review and adjust as needed to ensure you're on track to achieve your trading goals. Finally, it's important to be realistic about your expectations in the Forex market. Forex trading is not a get-rich-quick scheme, and it requires patience, discipline, and hard work. It's important to remember that there will be losing trades, and that's okay. The key is to keep your losses small, manage your risk effectively, and let your winning trades run. It's also important to have a plan for what to do when things don't go as planned. This may involve taking a step back, reassessing your strategy, and adjusting your approach as needed. In conclusion, creating a Forex trading plan is a critical step in your journey as a Forex trader. By having a clear and comprehensive plan in place, you'll be able to stay focused, disciplined, and on track, even when the market throws curveballs your way. Your plan should include your trading goals, strategy, risk management tactics, education plan, tracking system, and realistic expectations. Remember that your trading plan is a living document, and it should be regularly reviewed and adjusted as you grow and develop as a trader. Thanks for watching this video on the importance of creating a Forex trading plan. We hope it was helpful and informative. If you liked this video, be sure to give it a thumbs up, and don't forget to hit the subscribe button for more Forex trading tips and strategies. And as always, if you have any questions or comments, be sure to leave them in the comments section below. Happy trading!